Hi students, in this video we are going to see the section A questions of ACCA Performance Management pre-March 2025 mock exam. What is this pre-March 2025 mock exam? As you may be aware that before each exam session, ACCA publishes one mock exam for each subject specific to that exam session. So this is the mock exam they have published for March 2025 exam, and I am analyzing the section A questions here. First one, the data pertaining to the production of electric scooter battery in EV company for the last 4 quarters were as follows. Quarter 1 to 4, machine hours given, conversion cost given. In any quarter, should production capacity utilized exceed 50%, an additional cost of $60,000 will be incurred for 2 additional maintenance services on the machineries. The full capacity of the existing production facility in a quarter is 60,000 machine hours. Right. See what they mean by here. The capacity is 60,000 hours. What is 50% of that? 60,000 into 50% is 30,000 hours. So if you utilize more than 30,000 hours, capacity utilized exceed 50%. So if it is more than 30,000 hours, your fixed cost will increase by $65,000. Not 65, $60,000. It increases by 60,000. So until 30,000 there is a different fixed cost. After 30,000 it's a different fixed cost. Right. Using high-low method, what is the estimated conversion cost for the next quarter if the production capacity utilized is 35,000 machine hours? 35,000 means after the increment they are asking. Look at these machine hours given to us. These two levels are after the increment, 33 and 42. So let me analyze with these two levels. I am not going to consider the first two because that have different fixed cost. Let's take these two. You know how to find variable cost in high-low method. Variable cost per unit is difference in cost 3085,000 2455,000 divided by 42,000 minus 33,000. You can do this in the calculator in one shot. That is going to be, let me take the calculator. Right, so bracket 3085, I'll leave the thousands, 2455 divided by 442 minus 33. Is it 33? Yes. Good. We get 70. Variable cost per unit is 70. Right. Then how do you find fixed cost? Fixed cost, you know, total cost equals fixed cost plus variable cost. This is the formula. You can apply this to one of the two that you have selected, 33 or 42. If I apply to the second one, total cost is 3085. Fixed cost we don't know. Variable cost per unit 70. Number of units 42,000. Thousands I have left. If you want thousands, I will write it in full. No problem, as you like. Total cost 3085,000. Fixed cost plus 70 into 42,000. So I need to multiply these two and subtract it on the other side. Do it in the calculator in one shot. 3085,000 minus 70 into 42,000. 145,000 is the fixed cost. 145,000. Then now they are asking for 35,000 units. Again, write this formula for 35,000 units. Total cost is going to be fixed cost 145,000, variable cost 70, number of units 35,000 hours. That is a fully fledged high-low method question. 145,000 plus 70 into 35,000. But you get 2595,000. So answer you're going to write here 2595,000. Easy. You don't have to write everything when you are doing the exam. You can, take the calculator, do the necessary workings in the calculator. Since I am explaining, I am writing all this. Second one. Big data includes content created by all users on social medias that can be ranged from videos, photos, blogs to many more forms of appearance. Which of the following characteristics of big data are best reflected? This talks about different types, isn't it? Different types of information, videos, photos, blogs. I usually explain this as my example for big data, the posts that people post it in Facebook. So what is the meaning of volume there? The amount, like how many posts, millions of users, what they are posting, that is volume. Velocity, every second, so many posts are coming into the Facebook. So that is velocity. Variety, the types, different types of information. So this is about variety. Veracity means the reliability. Can we make decisions based on this information is veracity. So this particular information about variety. Now, some of you might wonder, when I did the first question, do I have to spend this much time to get the 2 marks? Now see, second question, it doesn't take much time. Within a minute you can answer it. So some calculations take time. Don't worry about it. Do it slowly, finish it. There are some other questions where you can save the time. Third one. Rex Company is a star-rated hotel operator. The management accountant plans to adopt a building block model by Fitzgerald and Moon for performance management. Which are the following key performance indicators the measurement for resource utilization? Resource utilization is something connected to efficiency, capacity utilization. So let's see what is there. There you go, average room occupancy rate. Average room occupancy rate means out of the rooms available, say you have 100 rooms in a month, 30 days, so 3,000 room nights are available. Out of 3,000 room nights, how many room nights occupied? This is what you call room occupancy rate, right? So let me make it bigger. Whenever I have calculations, let's make it smaller. Yeah. So that tells us the resource utilization. This is what I meant by capacity utilization rate. What about the other two? Average guest rating or cleanliness. That's more about customer satisfaction, right? That is, or you can say even quality aspects. Average guest rating on value for money, again quality. Average daily room rate, that's about the profitability, nothing connected to the resource utilization. AS Company is a large conglomerate with 3 divisions, division A, B and C. Both division A and B are profit center. Profit center means they have control over the income statement only. They don't have control over the investments. So balance sheet cannot be considered in their performance. While division C is an investment center. Investment center means they have control over everything. So both balance sheet and profit statement can be considered for the decision making. The accountant is designing a suitable key performance indicator for each of the division. Which of the following key performance indicators is most appropriate for assessing the manager's performance in division A and B? Division A and B, profit center. So make sure you don't include balance sheet. You don't include investments. First one. ROI, no, out. That is for investment center. ROI, again for investment center. Profit margin, yes. So last 2 answers are about profit margin. What is this? Profit margin with consideration of all controllable cost and traceable cost. No. Traceable cost you include if you want to analyze the division's performance. Understand, division's performance is different. Division's performance, that is different. Manager's performance is different. If it is manager's performance, only controllable items must be included. If it is divisional performance, controllable as well as traceable. Anything that is specifically attributable to that division can be taken, traceable cost. So here, since it is manager's performance, question is about manager's performance, you must take profit margin with consideration of all controllable costs only. Next one, question number 5. A long one. Let me look at the requirement. Which option shows the relevant cost of the 2 components for the special order? Question is about relevant cost. Okay, component X and component Y. YB company specialized in assembling CPU for desktop computer in accordance to customer's request. There is a request for quotation for a special order of a batch of CPU. Each of the CPU require 2 key components to ensure its durability. So both are materials. Just let's recall the materials, the relevant cost. I usually use a chart. What is the chart I use? First question you ask, is it available in stock? If the answer is no, relevant cost will be equal to market price. Why? You're going to buy from the market and use it. If the answer is yes, you have to ask the next question, is it regularly used? Regular usage. Yes, no. If the answer is yes, then even though it is in the stock, you have to replace once you take it. So relevant cost will be equal to again market price. Market price. If it is no, you had to ask, is there any alternative use? Alternative use means sometimes one material can be converted into another material and you can do something with it. If the answer is yes, relevant cost is going to be lost benefit from that relevant, from the alternative use. If the answer is no, relevant cost is scrap value, lost scrap value if there is any. Right? This is the chart that we usually use. So here first one, component X required are available in stock with original purchase cost of 5,000. That is a sunk cost, never relevant. Resale value at any time, that is a scrap value, 1,500, while the current purchase price is 6,200. Component X is often used in many other orders by the customers. There you go, regularly used. So it is in stock, it is available in stock. First answer is yes, right? If you go to the chart, yes. Regular usage, yes. So what is the relevant cost? Market price. Market price means current purchase price is 6,200. So if you look at the answer X, 6,200, there are 2 options. Now let's go to the Y, component Y. Such component contains some chemical that may cause an allergic issue if not properly handled. It is not commonly requested in most orders. So it is not commonly requested. So no regular usage. Part of the component Y required are available in stock from the leftover with an original cost of 4,800. Original cost is sunk cost, never relevant, never relevant. Part of the component Y required are available in stock, 4,800. So that 4,800 is sunk cost. The disposal of such component is expected with the handling cost of 2,000. Remaining component Y that required may be purchased with the cost of 5,600. Oh, wait. Now we have 2. Some stock are available in inventory, right? Partially, yes, they didn't say how much. So let me say, partially, first answer is available, partially no. If it is no, straight away you know we are going to buy from the market. Relevant cost is market price, which is 5,600. If it is yes, second question you have to ask. Is it regularly used? We saw question, it is not commonly requested in most customer orders. So second answer is no. It is not regularly used. If it is not regularly used, the alternative use, there is no alternative use, but however they say there is a cost of disposing. So imagine if this material is not used for this particular order, you are going to dispose it, incurring a cost of 2,000. It's not a benefit, it's a cost. So when you use this material for this product, you can save this $2,000. When you use this material, you don't have to dispose it. You don't have to dispose means you don't have to spend this cost. So this 2,000 can be saved. So I'm going to say for this 2,000, it's not a cost, it's going to be saving. Why is it saving? When you are considering this order for material Y, if you did not take this order, you have to dispose it at a cost of 2,000. Since you are taking this order, you can save this 2,000. Right. Whatever not in the inventory, you have to buy from the market at a cost of 5,600. If I assume that is of equal proportion 1:1, then the total cost is going to be 5,600. This is saving, this is cost. Usually all are cost. The previous 6,200 is a cost. In this case, we have a special case. A cost is being saved because of this order. So net amount is going to be 3,600 cost. 3,600 cost, option 1. Next. Indicate by clicking on the relevant boxes in the table below what is the performance that is measured by the following key performance indicator that is currently adopted by government hospital. Patient to doctor ratio. So this is basically input output efficiency. You remember in the 3 E's: input, process, output. So the cost of input is measured by economy. Output to input ratio, that means with less input making more output, that is efficiency. How far the objectives are achieved by the output is measured by effectiveness. This is the 3E concept. So here patient to doctor means each doctor, how many patients he is handling, is a measure of process efficiency. Readmission rate of patient is effectiveness. Readmission means the medication has not been successful, that means the objectives are not achieved, that is effectiveness. Which of the following information systems will enable a more efficient flow of information, such as procurement, human resource, production, finance and others across all departments and functions? Must be ERP system, enterprise resource planning. This only facilitates all the departments, all the divisions, everything. Straightforward. RT company is considering redesigning one of its signature products, product R, to better meet the market expectation. Existing actual cost per unit before redesigning was $1,700. With the redesigning, RT company is desired to have a profit margin of 25% on the target selling price of $2,600. The estimated cost per unit based on the new design is $2,100. Cost gap is what they are asking. All right, cost gap. You know, target cost is going to be, this is from target costing, price minus desired profit. Price is 2,600 minus profit is 25% margin. So I can apply on this. Yeah, so that is going to be $2,600 minus 2,600 into 25%. 2,600 minus 2,600 into 25%, 0.25 shall I say? 1,950 is the target cost. But they say the estimated cost per unit based on the new design is 2,100. So the actual cost is 2,100. What is the difference? 150 is the difference. So that is going to be the cost gap. Target cost, actual cost difference. Don't worry about the original cost because that is an old one. The new design cost is 2,100. So that has a cost gap of 150. Next. PY company operates a labor-intensive pewter manufacturing business with learning effects shown among the workers. The management accountant has furnished part of the production information on a new pewter product that launched last month. Cumulative output 1, 2, 3, 4. Cumulative hours given. For 3 units it's missing. They are asking how much is it. Okay, let's analyze this. You know, cumulative output, let's say, why is it not working? All right, so cumulative total production, cumulative total time, cumulative average time. 1 unit 9 hours, average is also 9. 2 units 16.2, so average is going to be 16.2 divided by 2, 8.1. So you can see total production doubled here. When it doubles, this has become 90%. 8.1 out of 9 means that is 90%. So that gives us learning curve of 90%. Question is to find the total time for 3 units. One option, straightforward option, could be to use the formula. What is it? Average time equals AX B. A is 9, X is 3 units you want, B log of learning curve 90% log of 2. Let's find B. We have log of 0.9 log divided by 2 log. You get minus 0.152. So B is minus 152. Apply here, you will get the average time. So it's going to be 9 times 3 to the power of minus 0.152 minus 152. You get 7.615 or 616. This is average time. So total time for 3 should be 7.616 into 3. So multiply this by 3 into 3. 22.84. Do we have the answer? 22.85 is there. That's the answer. Next. Which of the following circumstances best demonstrate the main reason that require planning and operational variances? You know, when we make planning and operational variances, once we start the year, once we start implementing our plan, due to some reason, if the plan is outdated, if any factors change, then we have to change the plan, change the budget, then it gives us planning and operational variance. So they are asking, in which of the cases you need planning and operational variances? An outbreak of unpredicted pandemic during the year that disturb the global supply chain. Of course, that will demand your plans to change. Then you need to recalculate your variances. What about this? TH company operates in a highly regulated market with strong protectionism measures adopted by the government. That doesn't mean anything has changed. That doesn't require a planning variance. A recent enforcement of new minimum wage act before the company finalized its budget. Before finalizing the budget means your budget is already up to date. Problem arises only if changes happen after the budget. TH company appointed a new management accountant to replace the existing management accountant who have been working with the company since its inception before it finalizes the budget. Again, before finalizing the budget, so that's fine. Those last 2 points are already in the budget. What is the requirement? Long data, read the requirement and go back. Private meteorology advisory firm is offering a guaranteed weather forecast for a fee to all its clients. Based on the above information, what is the maximum fee? Value of information they are asking. Value of information. How do you find value of information? You take EV, expected value without information, expected value with information, and get the answer. So EV without information means first for large order size minus 10,000 into 0.3 plus 83,000 into 0.7. Straight away you can type in the calculator. No need to keep typing every time. Or keep writing it. 83,000 into 0.7 minus 10,000 into 0.3. 55,100. Then small order size 23 and 40. These are the probabilities. 23,000 into 0.3 plus 40,000 into 0.7. 34,900. 34,900. So this will be the EV without information, 55,100. Now EV with information, how do we find? EV with information, how do we find? If the forecast is going to be dry weather, you will compare these two numbers. Which one is better? Small is better. You will choose small. So you will earn 23,000. If the forecast is going to be raining weather, you will compare these two. Which one is better? 83,000 is better. So you will choose the large order. But still we have not got the forecast, so we have to multiply by the probabilities. This gives the EV with information. 23,000 into 0.3 plus 83,000 into 0.7. 65,000. This was 55,100. Get the difference. How much is the difference between these two? 9,900. That 9,900 is the value of information. Next. TB company is a pesticide production company. One of its significant costs that grow rapidly in recent years that draw the management attention is the cost of disposing of toxic waste. Which of the following environmental costs? So they are asking whether it is internal failure, external failure, detection, prevention. This is internal failure, isn't it? Why internal failure? The toxic waste has been already produced in your output. It is already there. It's a failure. But before it goes outside, you have identified it. So processing of that, you can say internal failure cost. Internal failure. That's a long one. What do they say? Based on throughput accounting principle, which option shows the optimum production quantity? There are three products, J, L, M. You know, in throughput, what do we do? Right. In throughput accounting, J, L, M, selling price minus material cost is going to be the contribution margin, throughput contribution per unit. 55 minus 15, 40. 41 minus 13, 28. 62 minus 24, 38. Contribution is ready. I need to prioritize. Machine hours is the limiting factor. Can you see they are talking about machine hours? Machine hours per unit 4 to 5. See, sometimes you can do skimming. You don't necessarily have to read all the data to answer the question if you are running out of time. 4 to 5. So contribution per machine hour, 40 divided by 4 is 10. 28 divided by 2 is 14. 38 divided by 5 is 7.6. Rank. This is 1, this is 2, this is 3. So in this order, we are going to allocate the hours. Let me quickly go through this. Maximum machine hours available 80,000. There is a minimum order for product M 6,000. Oh, there is a minimum order requirement. Sometimes if you are skimming, you might miss it. So from these 80,000 hours, first I have to allocate for product M 6,000. Okay, let's do it. So 80,000 hours are available. M minimum order 6,000. This is minimum order 6,000. Each takes 5 hours. 30,000 allocated for M. Balance 50,000 hours. Then go to rank 1 product. Which is rank 1? L is the rank 1. Rank 1 is L. Rank 1 L. So this is for minimum order, not based on rank. This is the minimum order we already have signed. L 8,000 units demanded 2 hours. 8,000 units 2 hours. 16,000 will be gone. With that, L is satisfied. Balance 34,000 hours. Now go to rank 2. Which is rank 2? J, I remember. Yes, rank 2 is J. J. J, if you want to make 9,000 units, 4 hours, 36,000 is required. We don't have 36. So let's find out how many units we can make with 34,000 hours. 34,000, each takes 4 hours. If you divide it, 34 divided by 4 is 8,500. So when you make 8,500 units, this 34,000 is fully finished. So what is going to be your production plan? J must be 8,500. L must be 8,000. Don't forget M 6,000. The minimum order 6,000 is there. 6,000. Do we have an option like that? Here, option 2. Option 2. Easy but time consuming. Next. Which of the following items of cost should not be included in determining the minimum transfer price of goods supplied by one division to another division within a group of company? Transfer price, you know, minimum, maximum. Minimum, maximum transfer price. Minimum marginal cost of manufacturing plus any opportunity cost of manufacturing. What is marginal cost of manufacturing? That is variable cost and any specific or incremental fixed cost. That means any fixed cost specifically incurred for that particular product. That is marginal cost. Opportunity cost means because you are making this order, because you are manufacturing these products, if there is anything else that you are losing, that is opportunity cost. Maximum will be external price. If there is an external supplier, how much price he is quoting is maximum. So here they are asking which one should not be included. Opportunity cost should be included. Fixed cost allocated per unit should not be included. Fixed cost doesn't come here. Can you see? Minimum is marginal cost and opportunity cost. Fixed cost doesn't come in marginal cost. So fixed cost should not be included. Direct material, it's marginal cost. Specific fixed cost, yes. Last one of section A. Which of the following organizations would zero-based budgeting be best to use as its planning system? Public high school with allocated budget from the government. Private high school with fees charged to the students. Private sector organization that operate in stable market environment. Usually if it is stable market environment, you don't really need zero-based budgeting. Nothing wrong if you use, but not so important. Public listed company and construction company. See, to be frank, all four of them can use zero-based budgeting. There is nothing wrong in that. But if you ask who will be best benefiting from this, public, because they have a limited allocation from the government. Fund allocation is limited. So they have to focus more on cost management, cost control than these three. Of course, they also need cost control. They also can use zero-based budgeting. But compared to them, this one being a public high school where the funds are allocated by the government, zero-based budgeting is so important because they have a limited fund. They may have several activities to do. So how they are going to rank the activities, decision packages, ranking and you know, making the budget, zero-based budgeting is of more use than the others. Right? It doesn't mean others don't need zero-based budgeting. They also can use zero-based budgeting, but this is of more benefiting using zero-based budgeting. Clear? So that is the 15 questions of pre-March 2025 in section A. In the next video, we will see section B questions of pre-March 2025. Thank you.